The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I would like to make a personal thanks to one of our dinners named Fletch, who is better than Google. He posts some really wonderful articles each morning showing what's happening in the economy and other things. But Fletch, my hat's off to you, pal. You read more than any person I have ever met, except one. And that fellow lives in Birmingham, Alabama. But anyway, you do a great job. I wanted to thank you. Now, I had to put a call in today to Sister Mary Perpetual of the Little Orphanage of the Kings and Queens, which the Reverend Tyrone Passahat Johnson is the preacher. And what we're looking for here is a place to make a few bucks for the old orphanage. And if you will take a look, I'm going to walk through some charts here. This is the only one I've been wrong on this week. And if you remember, we based it also on the Canadian dollar, with the high correlation, with the crude oil. And remember, the foreign exchange market is a whole lot bigger than the crude oil market, and that Canadian dollar has broken well over $1,000 this week from the three drive pattern that we had. So this is a very important head and shoulders pattern. We hit the exact 61% retracement last night down there at 40.50. The risk here is going to be about 80 cents. It's been down 8 weeks, but we've got a few other things to look at before we decide whether we're going to do it. We need to look at gasoline futures also. And if we, I think I put the chart in, it should be in there. The crude oil chart should be showing, but now I'm showing the gasoline futures daily chart. And as you can see, we're at a 50% retracement of the low in February, whereas in the crude oil, we're at a 61% retracement. So it also is making a 1.27 of the move from April. So you've got several things there. You also have a Gartley pattern forming up since the high that was made in May. So we've been down 3 months into that. So it's much better to buy it here than when it was at 51. That's the way that it looks for me. So I don't know if that's right or not, but we'll see. Now, the last one we want to take a look at in this crude oil complex is the heating oil. And here again, you can see we're making an exact 61% retracement there also, and it's almost a 50% retracement of the low in January. So this market is not nearly as bad as the people in the news are telling you. That's my idea of what I'm looking at. To confirm this, we're going to look at the correlation between the, and this is one of the things that I focused in the newsletter this past week. It was the second thing. I'll go through the first thing in the newsletter in just a minute, but they're all related because it's related to foreign exchange, and you got to follow the money, and this is where the money is. But if you'll notice the correlation between the Canadian dollar and the crude oil, it approaches 70%, which is a very, very high correlation for anything that you're looking for. So remember, that's the thing that we want to keep our eye on. If you'll notice here, we're also going to now look at the Canadian dollar that we've looked at with this three drive to a top pattern that we had going over the past several months. It was a perfect ABCD expansion. We've broken well over $1,000 now. The 382 on this is the low that we made 2 days ago, and if we take that low out at 3,100, and we're not very far away, we're at 3120 right now. If we do that, that's going to tell us that it's going to be pushing it down better. Now, the reason why I think this is so important, and this is one of the things that I covered in the newsletter this past week, and this was the chart that I focused on, which was the dollar index. And as you can see, we had three key ratios coming together at that time: 61%, 78%, and 1.618 expansion of the BC swing, making the Gartley. And now we're trading down below the 90, near the 96 level in the dollar index today. And that's because, the euro, which we've been looking at, also has made some really great strides in here the last couple of days, because it is 53% weighted of the dollar index. And you'll see that this one is now trading up above 110 or 111. It's near 111.50 right now. So it's starting to move. We had that two ABCD patterns finishing there at that 109.50 level, and then it started to move. This also is the reason why you're getting a big move in the gold. We looked at the gold market very, very closely, and also the silver market. Both of those were telling us that we were ready to break out into new high ground. We had a lot of things telling us that that's what we were expecting to have happen, and that so far that is what's happening. So we'll see whether that's going to be the case or not. All this is related to the foreign exchange, folks. It really is. And there was another big announcement last night from Japan, and you will see that the Japanese market went total berserk. Not the market. It did. If you would have looked at the Nikkei Dow intraday, which is almost impossible to trade because of their breaks and stuff, but it was up 100, down 100, up 100, down 100, and it ended up being up 100. I mean, it was really insane over there. Not nearly as bad as it was during that Brexit thing, but it was still, incredibly unusual to see the volatility that they had yesterday. And it was all related to the Japanese yen currency. That's the one that was the real key to making these markets jump as much as they did. And what I'm doing now is stalling, trying to find the chart, because I had a really nice chart. No, that's not it. Oh, shucks. I'll have to put it at the break. This might be it. I don't think so. No, that's not it. Anyway, we'll put it up at the break, and I'll show you how crazy it was. But we had a 2% move in the foreign exchange market yesterday. I've got it. There it is, in the Japanese yen, and I'll put it up here. You'll see it. This was also related to this same pattern in the dollar index that we'll be looking, and you'll see that we are down now below the 103 level, and anything below 101 is going to mean this could really come unglued and get down to the 95 level. The reason why I say that is because from early June to late June, we had a pretty good sell-off, and then we had an ABCD correction stopping almost exactly at the 61% retracement. And now if we break this Gartley that we're forming right now at this 102 level, that's going to spiral us down, going a lot lower. And that could be the reason why we're getting some of these moves, like we're seeing in gold and silver and some of the other things that's happening. We had some wild swings last night, folks, in the Treasury bonds after the Japanese announcement. The Treasury bonds dropped 2 handles, 2 full points, $2,000, and that's not an easy thing to do, because that's a big market. And what happened was the market is now turned and has rallied back and taken back most of that loss, which means we still could be heading towards that level of 174 that we think has got a possibility of completing. So we'll take a break here.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've just broken below last week's low, yesterday's low in the Canadian dollar. We're now trading below that 131 level, which was a key level. So this looks like it could be a little boost to the crude oil complex also, because the correlation is so high there. The next one we want to be taking a look at is the stock market. We're going to have Bill Koval on the line here very soon at the break, and he'll talk to us about the stock market. I'm going to be looking at that in just a second also. Folks, we have been here in the stock market. We've been here for well over 2 weeks now at the same price using the New York Stock Exchange Index. That's totally different than what we're seeing in the Dow Jones, and also in the market for the I'm trying to do two things at once, and that's not an easy thing. Hold on. There we go. You'll be able to see the New York Stock Exchange. We've been here for well over 2 weeks, and now what we're going to be looking at is some type of an outlier event. I don't know what it's going to be to get this thing moving either one way or the other, because this is what the real market is doing. The NASDAQ has been going wacko over the past 6 or 7 days. It's been up every day this week with the market, going down. And the reason why is the fact that we've had Amazon and Google and all these other things with earnings, and they've been moving higher and higher. And then last night we had earnings for Google. It's up $30 a share, and Amazon is up $40 a share. However, the NASDAQ futures is down. So that means there's more of those 100 stocks that are heavily weighted are down than there are up. So just keep that in mind, that there's a whole bunch of them in there. So pay attention to that. But this is really I think it's Basil always says it's a bifurcated market. Well, it certainly looks like it to me. With this VIX index setting where it is, there's something is going to happen. I don't know what it is, but there's going to be an outlier event, either geopolitical, geophysical, or something related to some type of a disease or so. I don't know what's going to be, but something is going to make this thing move really, really quickly, very, very soon. We're not going to have to wait very long at all. If you'll remember, yesterday we posted the chart from Bill Flanagan from GAN Educators and Jim Flanagan. I'm sorry, not Bill Flanagan. And you'll notice here that the WD GAN was cycle from the 1950s was also completing here around August the 2nd. Now we're coming into a Friday in an up week, and if you'll remember statistically from Yale-Hurst Stock Market Almanac, the last 3 days of the month and the first 2 days of the month are the most positive days that you can have on a statistical basis. So I would look for early in the week, maybe right after Tuesday, which would be the 2nd, then we'd be looking at something maybe to see what would be heading down. But there's so many better things to trade than the stock indices right now because you have great moves in gold. You have great moves in the currencies, which are good. And we're starting, possibly, we could be seeing something happening in the oil complex because very few people believe that we could possibly do that. If you'll remember, about last Friday, about a week ago, we had our good friend Bill Meridian on from Vienna, Austria, and Bill was telling us to really watch that $40 a barrel level in crude because he thought that was going to be a bottom. He's also the same gentleman that says we would be making a top into the July in stocks. So he was spot on with that. So just keep in mind that that's what we're watching just to see if it does unfold. But it's a very low risk trade from this level. You're certainly buying it in an oversold market, and that's the real key, to keep an eye on. So that's the main thing. Now, with the dollar index getting weak, that means that's a help to commodity prices. So that could also possibly help corn, and it could also help wheat and soybeans and some of the others. But the real play from a technical standpoint is to look at that the crude oil complex because of the perfect patterns that we had here in gasoline and crude oil and heating oil. Now, remember, we had very good patterns in those on Monday, if you'll recall. And we had the Canadian dollar that we were looking at that was doing exactly the same things that we wanted. The Canadian dollar trade worked perfectly. I mean, it went right up to 132.35 level. The high was 132.40. It's now trading below 131. But the crude oil, we had to take a small loss in that on Tuesday, or it was actually on Monday, because it just didn't hold up. And you can't stand in front of a freight train, folks. And tried it, doesn't work. It doesn't feel good when that train gets through running over you. So just keep in mind that some of these patterns work, some of them don't, and that's the whole key to looking at. Now, I wanted to mention one other pattern that's very interesting on a global basis, and that is the Hong Kong market, the Hang Seng. And you can see here that we made a perfect 78% retracement from the October high. But the key here is if we look at the Hang Seng on a long-term weekly basis, you're going to see a incredibly bearish chart from a technical standpoint. And that is that we have a very, very long downtrend here. And the key is, if you remember in November, we hit that 382 retracement spot on. Then we broke down. We made a 78% retracement of the low from 2011. And since that time, over the past 7.5 months, we've rallied up to a 78% retracement, as we showed on the daily chart previously, spot on at 22,317. And then the market has backed off 100 and some points yesterday and today. And that tells us if this starts down, then you will have another ABCD structure taking you down to 15,000. That's a big drop, folks. You're talking 30%. And so pay attention to this longer term chart. We see pretty much the same thing in the Nikkei Dow. It's even more bearish, as I've shown in last week's letter. It has had a pretty good rally off the bottom, but nothing like some of the other markets that we've had, like the DAX. The DAX is, rallied up, quite a bit. The FTSE's also rallied okay, but nothing like what we've done here in the United States. So we'll see what's going to transpire with that one. But the key one to watch today, without doubt, is this crude oil complex. That's got everything set up to make it work. If it doesn't, move on, and you'll be able to find something that makes it look a whole lot better. But the main thing we're watching. One thing I wanted to focus here, I think we talked about this yesterday, and that was the euro. If you'll give me a second here, I wanted to put the euro in. If you'll notice that we were looking for an ABCD pattern to come in around the 110.60 level. We got to 110.66, and then away it went because we're trading above 111.60 now. Okay, folks, we'll be right back after this few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And we've got Bill Koval of WD Analytics on the line. Bill, are you there? They said he was here, but he's not here.
No, I can hear you.
Hey, there you go. Anyway, we've got your, we were talking to Bill Koval of WD Analytics out of Scottsdale, Arizona. Bill, I've posted your first 2 charts in showing the Russell and the New York Stock Exchange Index. And then when you're ready, I will move on to your next chart. So fire away.
Okay, great. Well, let me just give you the quick overview. I've been thinking recently with all the talk about new highs and et cetera, that maybe I would share a little bit about my process for kind of sorting through and taking action and, distilling down into to doing a trade. And these first two slides do indeed show some index comparisons. And I, like probably a lot of others, use them to spot convergence and divergence between indexes, which sometimes can give you a tip as to whether or not your particular index is going to keep moving up or down, or is it going to reverse. So in the second slide group on the top is the Russell, and I drew in some quick trend lines there to show how I kind of look at catching the reversals, and that can be helpful when you're trying to make a decision. That's a technique that is never going to hit the top or bottom, absolutely, but you're also going to very seldom take a position that reverses right away. In other words, you can try to buy a top, and then all of a sudden, the next day it reverses. With this technique, you're going to kind of reduce the instances of that happening. And then, we can go to the next slides, 3 and 4.
Okay. Bill, I have a question. The main one that I wanted to ask you is, when are we on the volatility index chart right now?
Yeah, that would be the next one, number 3 and 4. You can put both up if you like.
I'll do one at a time because I have a question. It also relates to another question that someone in the den has asked, and that is, when you're looking at this volatility index, are you looking at the relationship between new highs and new lows, or just just new highs?
Well, I'm in the particular case where we're at now, I'm looking for it to either confirm or diverge from the new high readings. And in this case, this volatility index, which I've got a lot. I turn every metric into an index and massage it that way. But what this is saying is that the volatility index is confirming, that it is a new high. But you'll notice on the far right, in the last few days, it has dropped down. In other words, it's diverging from the high that we hit yesterday or the day before. So that's useful information. It could be a prelude to a turn in the actual market. And certainly if you've got enough of these, and I've got tons of them, why, I can tell. I mean, if 10 are all saying the same thing, that's one thing. But if they're 50-50, it's another. And maybe all of them are diverging. So I get useful information out of that. But that's a long view chart. Sometimes it can be a little bit hard to read. And slide number 4 shows a little bit more of a granular look at how I turn an indicator into an index is what I've done here. And there also it illustrates the trend line technique as a way to enter and exit, a trade, or if you're putting trend lines on an indicator, that can still help you to enter a trade. And you'll notice, I mean, if you take a big view of that slide number 4, I mean, drawing trend lines, you're getting plenty of excursion, once that line goes into effect. I mean, it's a great way of coming out with some decent profits, I'll tell you.
It stays with the trend for quite a while, it seems.
Yeah, sure. And I mean, sometimes not every indicator I chart or try to massage looks good, but I come up with a whole bunch that, are pretty actionable.
Do you, this view right now, it appears that we're still heading higher?
I I, like you and some of your guest presenters, have really expected that we would. We would be rolling over, and the charts appear that way, and there is enough divergence in these indicators to give credence to that. And I wonder if the GDP number that was released here this morning might not be spell the death knell for this current rally. I mean, it's been a Teflon move, certainly, but you'll notice the other divergences. Virtually all the Momo leaders have, except for Amazon, I'll say, have come in. I mean, they're all kind of damaged goods, if you will.
Mm-hmm. I noticed Google was really strong again too. It's into new high ground also this morning. So both of those. Which one is that? Google and also
Google.
Amazon.
Okay,
yeah,
sure.
Both
Yeah,
of
that's
them.
strong earnings. So that makes sense, and that's legitimate. And those of us who have doubted this rally have learned a few things about how the broad investment community weighs very heavily, big long-term metrics, and they have managed to bail those people out. I just think the days are numbered, however, for it. So,
it certainly
but the bottom
seems
line
like
is, I keep reducing down to actionable frames, and in this case, slide number 5 is a chart of price line, and I had a call in my newsletter just the other day on the 27th on this. I mean, I nailed it incredibly. It's unbelievable. If some of your listeners want to, sign up for, a free trial of the newsletter, what I'll do is send a whole series of price line slides for that trade call. But dealing with what we have in front of us, it illustrates the methodology, which is to. I have 3 criteria to enter a trade. Number 1, the trend line. Number 2 is volume line, which is shown here in yellow. And number 3 is an orange cycle line that I use. Unfortunately, I didn't realize it, but it's not on this particular frame. I use it more on intraday frames for entries.
Bill, stay with us. We've got to pay a few bills, and we'll be right back, okay?
Sure.
Okay, thank you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right.
The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, with Bill Koval of WDK Analytics. And Bill, I've posted your contact information into Tiger Den, so they'll be able to take a look at it. Why don't you repeat your web address or email address so that the folks that are not in the den right now might take a look at it? What is your email address to reach you?
Yeah, sure. The website is simply wdkanalytics.com, and the contact email is just info@wdkanalytics.com.
Okay, now we have a question regarding your recent comments that we made about those 3 things that you looked at, and the person asked, are you weighting those in any particular weighting sequence? Like, do you weight volume more than price? Is there a weighting system that you use?
Well, in a general sense, I think price is paramount in any decision that you make. I mean, it's got to be weighted. I weighted something like 2/3 of in a weighting. Volume, I think that's worth 1/3, if not 40%, sometimes 50%. It's volume is extremely important, and I use it in a different way. I mean, I don't use volume histograms. I mean, you can't tell anything from those. I use my own special volume lines. So, and they're instrumental in choosing setups for entry, be it long or short. I always look at volume to decide whether it's supporting or resisting price.
Well, our leader here, Tom O'Brien, certainly believes in volume, and it's been very successful to him. So anytime we can get someone to tell us more about volume, we're always interested. So that's really a good thing. Okay, now what is your call here on the market? What do you think will happen here? This was another question someone asked. What do you think will happen here between now and next Friday? Any ideas?
Well, I think the GDP number is going to dent things a little bit. My feeling is it's not going to kill the market and probably be a short-term buy opportunity. Maybe it's going to get tagged for 10, 20, 30 points. But I think that'll be a buying opportunity because they're in a buy-the-dip mode. But option expirations in any given month can, but not always, are seminal events. And sometimes these guys and gals, they'll put on big positions going into, option expiration. I'm still looking for August and September and October to be rough months, so that even if they buy the short-term dip into next week, I still would not want to be long for the most part for the next, month or two or so.
Okay, that sounds great. Well, listen, I want to thank you for being on our show today. and sharing us your information. And anytime that you see something that really, makes the light bulbs go off, please drop me an email or a phone call, and we'll have you on the air again, because you've had some great calls through the past few months, and we always like to hear what you have to say.
Well, I sure will do that, Larry, and I appreciate the opportunity to to present a few ideas. As with my newsletter and a lot of other things, you understand that over time, the harder you work at it, the better you get, and so I try to up my game when I'm speaking to your traders, because they're pretty sharp.
Oh, that's the understatement of the year. They got some people in that tiger den that are just absolutely phenomenal. And the information that they share with us throughout the day is also really, really good. So I appreciate the kind words, and I know they do too. But thanks again for being on the show, and we'll see you in a few weeks. How's that?
All right, great, Larry. Thanks. Bye-bye.
Okay, thanks a lot, Bill. Bill Koval of WDK Analytics out of Scottsdale, Arizona. Well, something interesting has happened here while we were on the air with Bill. We did come within $1 of the 61% retracement of this downtrend move in gold up at the 1356 level. The 61% retracement was 1357. We quickly backed off, $10 an ounce. Now, we must play the devil's advocate here, because even though this chart looks pretty bullish right now, it could change in a heartbeat. And any move below 1325 in the gold will set up a move in gold to at least $1,280 an ounce. So if you're long the gold, make sure you put your stop in around the 1325 level, or close to that, because if it does turn, it's going to be, it could be really nasty, and that's nothing more, than other things that we're looking at too, because, the dollar index could turn on a heartbeat too and go back up again. So you've got to protect yourself, against these particular things happening, and that's the real key, to what we're watching as we're doing this. I wanted to just give me 1 second. I had the silver chart up, and I wanted to do the gold chart so that I'm able to. Still keep getting the silver. Just 1 second here. Eventually, I will get the gold. Whether it'll be in my lifetime or not, I'm not sure, but I'm not going to worry about it. But just remember that the gold price at 1325, if we get below that, that's not going to be a very good sign. That's the key to watching some of these things, that we're looking at. As far as the S&P, it's had a lot of trouble getting through 2171, 2172 this week. But as we've seen from the New York Stock Exchange Index, the market has gone nowhere. It really hasn't. It's just been a very, very quiet market, and that's really all that it's done. Nothing more than that. And the same thing we're seeing even in the NASDAQ. It's only been a few stocks in the NASDAQ that have been able to do that. So we'll see what's going on. I realize that I haven't been able to post a chart here, and that's because I haven't been able to find it, but I'm still looking. That's the key. I never stop looking. Even when I'm not looking, I'm looking. I will put the silver chart up, because it'll show you the same thing that I'm talking about here in the gold market, because if we can't get moving here and we start down, this is not going to be very good. So if silver goes below the 1960 level, that's quite a ways from where it is right now. That would also tell us it would be heading down to about 1820 in the silver. I'm saying this to you because these markets stop so far right on those spot numbers, and whenever they do that, that lights up a light bulb here in the old basement, and you got to be aware of some of these things occurring. So keep that in mind as we go through the rest of the session today. We had another question about the position that we were looking at in Apple. We had a really negative pattern in Apple at the 103.70 level in Apple, and so far we're still trading around the same price as that level. That's trading at 103.90 right now. As for the moves in Amazon and the moves in Google today, These are very accentuated moves. As we've shown before, you can see how crazy it gets in this overnight markets for Amazon. And this is a $700 stock, folks. Are you kidding me? I mean, that's an expensive stock. And it's having moves like you really can't look. Now, someone's asked a question about oil. It's dropped $1 a barrel here. Well, almost not quite $1 a barrel, but close. We've backed off. Let me see here, just double check. I don't think it's anything wrong with it. It's dropped 60 cents. This is a longer term pattern, folks. It might make a new low, but I don't think it's going to collapse. I mean.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to talk about this gold chart that I've posted into Tiger TV. As you can see, the reason for buying it, of course, was the fact that we had the higher bottoms, right at the 61% retracement of the smaller swings. We made a 50% retracement over 3 weeks. Did the same thing in silver, but the silver took out the low from July 8th by only a penny. We did it by more than $35 in the gold. So this was part of the key of what we're looking at. Now, this chart, because we're so close to the 61% retracement today at 1357, we got to 1356. If it should turn down and we get below 1325, as you can see, that would set up an ABCD structure taking you down to 1,280. I do not think that's going to happen today, but that's just danger signal that you got to be aware of, that when these markets do reverse, and as we know, they do have a tendency to jump around quite a bit, especially on a Friday when we've had the dollar index and the currencies moving as strong as we've had. We've had a huge move of more than 2% in the Japanese yen. We're now trading below 103, and we hit almost 106 last night. So that's a very, very large move. On the second part of this is if gold should get above 1360 today on a Friday, you can almost assure we'll hit $1,400 next week. So if we get above 1360 today, you do not want to be short gold over the weekend, in my opinion. But that has to get above there. That's the way I look at it. But this has got a potential because we were down 3 weeks. We came out of here really strong, made the 61% retracement in 2 days. That's usually a really good move. But as we mentioned before, these things can change, very, very quickly. As far as the stock market, folks, this thing has not done anything for 2 weeks, and that is massive distribution, in my opinion. It's been masked a little bit by the NASDAQ that has gone up and made a triple top over the past 2 years, up at that 48 and 49.30 level. We only made a higher high by 1 cent in the NASDAQ with all that news on Google and Amazon. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.